Hello, this is Dean Malone with ComStveX. Hope you're doing well today and you getting some good trades. In a previous video, I talked about trading the market using psychological levels, especially when the market is range bound and not seeming to make a lot of sense of which way it's wanting to go. So in order to make sense of the market, oftentimes we just look to trade psychological levels, especially when the market's range bound. And there's major psychological levels. This would be the zero number, like 3100, 3200, and the 50 level, like 3050, 3150. As you can see in the Eurodollar 1 hour chart, the market played the zero level and played the 50 levels. And as of today, it had reached up here and hit the 13200 level, starting at 3050, 3100, 3150, and then finally reaching up here to 132. So it played the major psychological levels. I'd also mentioned that you could trade the minor psychological levels. This would be the 25 level and the 75 level. And as we can see, if we look closer in, there are times that when the market was attempting to move from one major psychological level to another, like in this case, attempting to go from 3050 area up to 3100, well, there were times to where the market would just move up about halfway and fall back over. This is where it's hitting that secondary or minor psychological level, the 75. We had the same things happen here. Once we broke 3100, we moved right up to about 3125, then fell back down. And today, when we broke 3150, look where the market went right to. It went right to that 3175 level, that minor psychological level, bounced around for a little while, actually came back down to 3150, and then eventually made its move all the way up to 132. Well, today what I want to do is I want to share with you another way of looking at the marketplace using levels. And this one can even be potentially better for you than just the primary 0, 25, 50, and 75 levels. I'm going to take a look at the pound dollar on a 1 hour chart. And what I'm going to do is I'm going to go back 2 weeks and I'm going to look for significant swing highs and significant swing lows. See, if you're trying to make sense of the marketplace, oftentimes, as I often tell people, is price has tendency to move back to where it's been before. If that's the case, and that is very true about the market, then a swing high, which represents a resistance area based upon price movement, and a swing low, a support level dictated by price movement, these would be significant levels for the market to repeat. And what we look to do is to go out on like a 1 hour chart or a 4 hour chart, draw out these swing high and swing low levels. Then as we trade intraday, down in our 5-minute or 15-minute or 30-minute charts, these levels will appear. And what we're looking for is for the market to either bounce or break one of these swing high or swing low levels. Now, be mindful of one truism in the marketplace. This is an old adage about trading. You've got to write this down. Remember that old support becomes new resistance, and old resistance becomes new support. If you've never heard that before, write that down. Old support becomes new resistance. Old resistance becomes new support. And what we're going to look for in the marketplace is as we draw out these swing high and swing low levels, we're going to look at how the market reacts as it approaches these levels as we look at this week. So typically what I do in my trading is I go back a week or two and I draw out the swing high and swing low levels. So as I'm trading the current week, I look for the market to approach these levels. I look for a break of the level or a bounce off that specific level. Now, before I get too much into this, let's talk about what makes up a swing high and what makes up a swing low. So what I'm going to do real quickly is simply show you what I mean by swing high or swing low. What we're looking for is basically a rounded bottom for a swing low and a rounded top like this for a swing high. And basically what you look for is a high, a higher high, then a lower high. That is what we refer to as a swing high. A swing low is where you have a low, a lower low, and then a higher low. That dictates a swing low. Now, oftentimes it's not as clean as that. Sometimes you'll have a situation where we just have multiple lows and it turns. So you have 3 higher lows right there. Here we actually have a double top and kind of a double bottom. That actually puts us in a range. But what we look at is we have this high, we have this high, and we have this high. So this is a rounded top here, making that a swing high. So what I'm going to do is simply go in here. I'm going to put on a line about the average point. That's about the average right there for that swing high. I have a swing low way down here. There's a dual point right there. I have another one right here. Grab my lines and just set it there. Now you can go to the lowest low and the highest high if you want. I kind of oftentimes look at, and I favor oftentimes the average, because the market doesn't necessarily move right to the pip. But if you have 2 or 3 about the same area, oftentimes what I'll do is I'll move it right to about the average. Swing high right there. I'll go ahead and put that high point right there. Okay. And now that, let me see, we have this one right here. All of these have significance. And again, I'm on that 1 hour chart. You can do this on a 4 hour chart if you want to. So that pretty much lays out the swing lows and the swing highs for this week here. Now there's one way up here too, but it's really kind of another range, and we actually have a higher one up here. So I'm going to put this one, as we look at just this past week, that is being a swing high right there. The market comes down, and this is real close to ones I already have, so I won't really mark that one, but I'll mark this one here. This one has a high, higher highs than lower highs. I'll mark that one. Okay? So, and oh, we have this one here, and that's pretty close to this one back over here. I'll move it up just a little bit so that low and these lows match up. Okay, now at this point, I'm simply going to move forward in time, and let's see how the market reacted to the swing high and swing lows. So we just move forward. Notice that the market, as we came forward, just came up to that level, fell back over. Okay. And this right here, now we end the week right about another swing high, and the market rolls over right here. So I'm going to add one more because that was about the end of the week right there. Okay, now let's just take a look at this current week, and we'll pretty much just kind of go bar by bar here looking at the chart. Okay, so I zoomed in here. So let me move over to our current week. Here we go. So you can see that we moved up right there to that level. Let's continue here. Push down to a level. Now notice that the average price bar here is above the price action channel. So there's probably going to be a break of this level here. Where here, most likely wouldn't be a break of that level because the price is still above, the average price bars are above the price action channel. We'll go ahead and continue forward, and then boom, a break up, and look what the market does. The market goes pretty close to that level right up there. And let's continue, and then look, it drops down, and when it dropped down, it broke through this level here. Price comes below it, and we go right to that next level right there. And then we drop down to another level. Look at this. And look where the market comes pretty close to this level here, bounces back up to a level, to another level, and we'll just kind of finish out the week. Just watch what happens here. Watch how the market plays the level. Look at that. Pins right to the level there. And then we move up and then pins to that high that we had placed from a week ago. And now we push higher, and we actually move up almost to the 160 level, which would be a psychological level. Not quite to it, but what I want to get at is the market played the previous swing highs and swing lows. And make note, when price is above the price action channel and you're moving up, look for a break of a level to the next level. When price drops below the price action channel, look for it to go to the level and then break down to the next level. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you in your trading. Again, look for swing highs and look for swing lows. use these just as much as you would use psychological levels. Everybody knows the psychological levels, but interestingly, how few traders will concentrate on swing highs and swing lows on the higher time frames and trade off of those in the intraday time frames. So again, go onto a 1 hour or 4 hour chart, mark the swing highs and swing lows, then look to trade those levels, either a bounce or a break, in your intraday charts. Well, folks, Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.